thank you, Irene, for being back with us. It's been a long time, and you match our glasses so beautifully.
That's what I set out to do.
So, Irene, you wrote a really terrific piece for us for Fortune.com about a week ago about the most important decision you made in the last year. Tell us what that decision was.
Well, one of the most important decisions I made last year was to invite Nelson Peltz to join our board of directors. And as you would imagine, those of you who are dealing with activists in investing in your stock, it was a very difficult decision. But after much thought, as I looked at where we were headed, we were operating in a very challenging environment. There were lots of thoughts about what we could do, how far we could go, how fast we could go. And after taking a look at some of the ideas that he talked about and understanding where we were going, the board and I made the decision to invite him to join our board of directors. We have a highly experienced, highly talented board, and I must say he's been a very constructive member of our board.
So you have just recently in August, Bill Ackman disclosed that he bought $5.5 billion worth of Mondelēz stock. He is now sort of agitating. I don't think he's asked for a seat on the board, has he?
No.
No. Why are these activists going after Mondelēz?
You know, we're a very good investment. We have created a very unique property. As you mentioned, we spun the company off about 3 years ago. And we have a very unusual portfolio. 85% of our revenue comes from snacks. Snacking is a growing behavior around the world. We have a portfolio of leading brands. You mentioned a number of them. And we have a very good geographic footprint. 40% of our revenue comes from the emerging markets. And we do have an opportunity on the margin front. We have taken a number of steps over the last couple of years from both a cost perspective as well as stepping up our revenue growth. And as a result, our margins have improved quite considerably. So it's an attractive investment. I think there's a lot more to come. But we're not surprised to see that it's really garnered the attention of a number of very prominent investors.
So a dear friend of the most powerful women community, Ellen Coleman, announced her retirement from DuPont just a week and a half ago, and she is not with us here. And we look forward to having her back to hearing her entire story. She waged a war against Nelson Peltz and won the shareholder vote and lost the long game. So I know you know Ellen. Have you talked to Ellen? Did you talk to Ellen while she was waging that battle? And what do you think of that whole thing?
Well, I think a number of us watched with interest the battle that Ellen fought, and certainly many of the other battles that are being fought, to see what we can learn from it and to understand where her company is and what their perspective was. I think the decision that she made, we all cheered her on when she won the proxy fight. I think that was really quite an accomplishment. And she's now made the decision to retire. I have not spoken to her since she made that decision, but I have enormous admiration for Ellen. And I think each company has to look at the circumstances through their own lens. As I mentioned, in our case, we were on a path. In our case, Nelson had a perspective about that path. He was very well aligned, and so it was a different decision for us.
I mean, you had been dealing with him for a long time, and when you spun off, when you split the company, you actually made a standstill agreement with Nelson Peltz, right? Not to buy more stock. So you knew him pretty well. You had dealt with him for a while. How do you decide, Irene, how to engage with an activist? And for women who are not at companies who have activists knocking at their door or inside or in their boardrooms right now, I think probably most people in this room worry about activists in the future. So what's your best advice?
Well, first of all, I think the best advice is you have to engage with all of your shareholders. And the reality is that I learn a great deal. I spend a great deal of time with shareholders in the course of the year. And we have to listen to what they have to say. They're making significant investments in our stock. And in the case of activists, I think one chooses not to engage at their peril. They are vocal. They have very strong positions. I think in some cases, the nature of their holdings does not justify the loudness with which they speak. But the facts are they do have a forum. And I think it's imperative that we, as leaders of companies, public companies, engage with them. And the reality is, in many cases, they don't know the companies well, and it's helpful to sometimes to bring them into the tent and share with them what's going on. But in many cases, they have some ideas that are worth considering.
So in 2013, Nelson Peltz expressed the view that Mondelēz might be better off being sold to PepsiCo. You invited him onto the board in January of 2014. You're now in board meetings with him. What is the impact of Nelson Peltz on your board? What's it like?
As I said before, he's a constructive board member. He's one of 12. I have a very experienced board. Without a doubt, as I invited him to join our board, we made clear that he had an interesting thesis that was not going to be part of our conversations. But the reality is, he has a great deal of experience in consumer goods in the food industry.
He does.
And he brings
he was an operator.
So he brings to the table, quite frankly, I think he brings more operating experience than many other activists that are out there. And so he's been a constructive board member.
Why aren't there any women activists?
I think women perhaps might choose to do things in a slightly less public way, and they actually might get them done faster.
Irene, you're doing a lot of cost cutting now, and Irene spent most of her career at Kraft. I can't think of another woman leader in the food industry who has more experience with cost-cutting, building brands. Denise Morrison is here, no offense to her, but Irene did a short stint running Frito-Lay for PepsiCo and then went back and became the CEO of Kraft. How do you continue to drive innovation when you're in major cost-cutting mode?
I think the biggest mistake that people make when they think about cost-cutting is that it is an either-or choice. It needs to be an and, particularly in our current environment. Our input costs, as you referenced in the introduction, our input costs have risen quite considerably, particularly cocoa, which is a big input for us. Forex is, the dollar has been so strong, so Forex has been a factor, making our products more expensive in local currencies. And so as a result of that, it's caused us to have to cover our costs if we want to protect margins and protect our investments in our brands and our people. And so they go hand in hand. I think it is imperative that the costs that one cuts be sustainable. They can't just be episodic. I think many companies have the experience where they get themselves in a jam and they cancel the budget for the following 2 quarters or something of that nature, and that's not really very productive. We were one of the early adopters of zero-based budgeting. I know it's become quite a thing right now, but the fact is the task of going back to a clean sheet of paper with respect to each of your budgets is an incredibly enlightening and very productive exercise. And so we found a lot of cost, whether we send our packages FedEx or we send them by snail mail doesn't really significantly alter the success of our enterprise. And there are so many of those non-working costs, I would call them. And so most of our focus has been on finding those costs that we really felt we could take out of the operation without compromising effectiveness. And then we've redeployed those dollars back into investing in infrastructure, in marketing, in selling, and in innovation.
What is the most interesting trend in the food industry that we might not know about and that intrigues you?
I think one you'd probably know about, but it's actually perhaps a little more interesting than you would think, is e-commerce. Food is not as popular an item in e-commerce as perhaps diapers and other consumer staples. And in our case, it's a significant opportunity. Only about 2% of snacks today are bought on the internet, but we see a tremendous opportunity to be able to improve that profile. And so we're looking at it actually in a number of different ways. The first is simply we've got an enormous number of Facebook, Twitter fans, over 40 million fans of Oreo and Ritz and some of our iconic brands. And so we've been able to monetize some of those by putting a buy now button on the various sites. We have a very strong relationship with Alibaba in China and with Amazon here in the US, and we're trying to work together to learn how snacks could be a bigger part of their repertoire. And then last but not least, we're looking at just whole new opportunities to invent new products that you would only find online. So for us in snacks, the e-commerce is a really untapped opportunity.
And what kind of products would you find only online?
Well, customized, for example, you can get Oreos for your wedding, or you can have customized Trident Star Wars bottles and things like that. We're targeting to develop about $1 billion business by 2020 from only about 100 million today. So it's a huge opportunity for us, and I really believe we've got the kinds of brands that have such strong relationships with our consumers that it will be a very, very attractive venture for us.
Who has a question? Yes, right here. Wait for the mic, and please identify yourself right up here, and then we'll go back there. Right here first.
Thanks. My name is Bethany Mayer, and I just have a question on, as you said that the trend in snacking is growing. How does that correlate with the trend in health and worrying about obesity and what's going on in the community today with that?
Well, Patty asked me which is the one you might not know about. I think most everyone would be well aware of the challenge of obesity in the environment today. And as the largest snacking company in the world, we take that challenge quite seriously. So we're very much focused on improving the overall health profile of our portfolio. Many of you may be familiar with a product called Belvita, which we launched here in the States a couple of years ago. Products like that bring a whole new dimension of satiety and wellness to the act of consuming snacks. And we are making many changes to the overall portfolio, putting in lighter fillings, smaller package sizes, and continuing to look at opportunities to take out sodium, to take out saturated fat, and to put back more whole grains. So it's a major effort. We've actually made a very public commitment that 50% of our products by 2020 will be focused on health and wellness, and I am quite confident we'll get to that goal. But it's a very, very important area of focus for us.
And yes, we have a question back there.
Hi, Irene. Carolyn Miles from Save the Children. And you mentioned this at the beginning in terms of the influence of commodity prices on your products. But I'm interested in how you think about sustainability of your supply chain. And you mentioned cocoa and the impact of that supply chain on emerging markets and in emerging countries.
Yeah, it's a huge issue for us. We've made about $400 million investment over the next 10 years in a program called Cocoa Life, which is designed to help the farmers and help us teach them more sustainable methods of farming, particularly in the key cocoa growing countries like Ghana and the Ivory Coast. It's an opportunity for us to educate them about modern farming techniques, and the benefit to us is it improves yields. And so it's been a real win-win for us to be able to help the local communities, to incent more of the local farmers that were leaving their farms to go to the big cities to stay in farming because it can become more lucrative for them. But it's a critical area of focus, and we just spun off our coffee business, but we were very actively engaged for coffee as well in helping to promote more sustainable farming methods. So it's a big focus area, and we're making a sizable investment.
Who else? Anyone else? Okay, right here.
Hi, my name is Xunyi Ye from CSOV International, a global communication company headquartered in Beijing, China. You just mentioned about building a strong relationship with Alibaba. Obviously, that's a kind of a channel to reach out to a China consumer. I'm wondering, are you working on any strategies to localize your snacks? Because obviously, China consumer has a different taste bud.
Yep.
And I was wondering, could you share, is there anything you're doing in terms of competing in that local market, which is the large market, obviously?
Yep. You know, I've told the story many times about how Oreo became the largest selling cookie in China, and it was by localizing the offering that you all know. The sandwich cookie turned out to be too big, too sweet for Chinese consumers, and so we made it smaller, we made it less sweet, we offered a green tea flavor, and so we are constantly looking at opportunities to make sure that the snacks that we're offering are relevant. Interestingly, we just launched a product called Oreo Thins, which is a thinner version of our Oreo in China. It's about a year old now. It's been a very strong success there, and we actually just brought that product to the United States. The Belvita product, I mentioned Belvita a few minutes ago, the Belvita product that we sell in China, we just launched it about a month ago, is a little bit less sweet. The biscuit itself is a little bit smaller. So we do research with local consumers, but what we are finding is that consumer behavior the world over is more similar than it is different. And so our first premise is to see how we might leverage the large platforms that have been successful elsewhere in the local markets, and then we adopt them accordingly depending upon the local consumer's needs.
Irene, what is your read on China, on Europe, on the economies there?
I would say the outlook is for not much change in the foreseeable future. I think we were on a very significant downward slope, particularly in Europe. I think we've seen that stabilize, but we're not expecting a very significant recovery anytime soon. It's one of the reasons that we've been as focused on margin as we have been, because the opportunity to protect our investments comes from making sure that even if our categories are less strong than they were, we can still make the investments we need to in our brands. The good news for us is that the outlay for our products is not that sizable, and so even in tough economic conditions, chocolate is still a very popular food, and so it's for the most part, although we have seen some slowdown in our categories in the key emerging markets, we certainly are still seeing growth, and we're backstopping our plan by focusing on what we can control, which is our costs.
Terrific. Thank you very much. Thanks for being back with us.
My pleasure. My pleasure. Thanks, Patty. Thank you.
Okay.